The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And what a day a difference makes, or a difference a day makes. Dyslexia, a cure for found. Anyway, we're up almost 20 points on the S&P cash, 2.14 billion shares. So volume about what it was yesterday at this time. We'll have to see how it comes back in. As I've said now for a week, I think we're pretty much in a trading range. That trading range is somewhere around, I thought it was 1930, but probably more like 1922 or something. To 1970. We tried above 1970, got pushed back into it yesterday. And then we had something very different happen that I've seen for a while. And that was we were up overnight, very high, about where we're at now in the actual cash. But we were up 150, 160 points or something in the Dow, and 30 points in there, 25 points in the S&P. Anyway, there was just a never-ending deluge of people standing on top of the bid all the way down into the early morning. And normally you don't see that. If someone's either trying to get short or they're trying to do something else, i.e. get out or get short, they don't generally try to run the table, a little pool metaphor there. They want to be able to get in. They're not interested in destroying the market all at once. They'd like to sell short at a higher price, or they'd like to cover at a higher price, or they are driving the market down so they can buy more. And that's where being incredibly conspicuous about the way that you sell seems almost heavy-handed and outright. And I saw that we did in the long-term newsletter add a position today. I added to a couple of my positions that I had in the daily newsletter. And I stopped out of one of my stocks, and we're going to get into that. But stopped out for a 6-cent loss on a $5 stock. So we all know that I'm feeling the huge sting of that today. It'll take me all of the next 15 seconds to forget about it. But we'll talk about it and why I decided to go ahead and take my money and go put it into other stocks today. But I think there's a lot of opportunities out here, and I may have a big different call than most. A lot of people, I was talking to Andy Heck earlier today, and he thinks that the market's lost a leg and there's no tourniquet on it, so we're just going to bleed lower. I think that we have had a huge, and normally the market kind of takes one toe at a time and works its way up. It doesn't just tack off the whole leg right off the bat. But I think we kind of just had the Band-Aid pulled off all at once, and it pulled a lot of hair with it. And that's probably put in at least a temporary, if not medium-term bottom in the market. And that has at least got us this trading range from about 1920s to 1970 range, where the volume pretty much falls out above 1970. And the volume continues to be strong down at the lows, but I suspect that is because there's a lot of people getting drilled out of the market, but there's some bigger and stronger hands that are buying at those lows like we saw today. Anyway, okay, your opinion poller, can the SPX launch on short covering into next week's triple witching? I think we're, and I said it before, I think we're going to break higher and go to about 2030. And at that point, we're going to have a good decision on whether to short this market. And I think you're going to have either a big ABC or you're going to see that the market's adjusted to the rate hikes and change. I think we talked about it on Tuesday when we were playing some of the Jim Chanos cuts that he did on that hour-long interview on NPR. But you know what I took away from that hour-long interview, I didn't play the whole thing, of course, here, but I told everybody they probably should listen to it, was how much that the stock market in China really isn't going to affect the U.S. market. And his views on China, he's, of course, a huge short advocate of China. I suspect that he's probably starting to take some of the cash off the table. But for the most part, you couldn't own stocks here in the United States, or at least certainly not the A shares. You were owning something that was kind of a company that was a shell of a company of something else that your brother's uncle's nephew thought that you owned if you bought in China. Of course, everybody knows my opinions of owning Chinese companies already. And I yelled and screamed starting back in May about the problems that I thought coming up. I was a little early the first time, made a lot of money, basically in the third world markets, going short commodities based on the problems with China. But yes, I think we could go to 2030 by next Friday easily. Maybe earlier than that, could be in one day. But I think that's probably somewhere around where we're going to find incredibly huge sellers that are kind of holding the bag. And at that point, this market's going to be a lot tougher to go higher. But I just think we're going to eventually break higher. I do not see anything out here. Now, if you looked at the indexes, I can give you a good reason to say that you think that this market is headed lower. I wrote in my newsletter, I don't know, I guess it was Tuesday. All these days kind of just fade into one another now. When I write something, I remember writing it, but boy, it's like, was that last week or was that yesterday? Anyway, I wrote in my newsletter that I run a scan every day, and that scan looks for stocks that are testing previous highs or previous lows on lighter volume. And how many of those stocks, individual stocks, just had no volume at lows, and some had no volume at highs. But it's very tough for me to see so many stocks having low volume, and then the indexes having all the volume. That tells me one thing, and that is that a great deal of people are using the indexes to push the markets around, that most of the people in these ETFs are not actually making the individual stocks have any volume. It's just a lot of high-frequency trading, and the extreme volume we are seeing is probably all pennies and maybe 2 cents up and down, back and forth, and that is not translating into the ETFs actually moving in and out of any of the positions they have. Why the ETF may be trading up and down, they're still not buying or selling the underlying stocks. And for me, the ETFs and the indexes are more like a symptom. They are not an indication of the underlying condition. That all the stocks that are in these indexes is what's telling us the truth, and what's telling us the truth for the next few seconds is the indexes and the ETFs. And that's why you have all the volume in those, and the poor little stocks are not getting that much love when you look at the individual stocks. A great deal of them, especially the stocks that are less well priced. My guess is that a lot of these have gotten to levels that are just astronomically low, and why I added yet another position on a stock that's trading a one that I loved. It has fallen from the sky like what was the name of the, was it it wasn't Pegasus that flew to the sun, but his wings were made of wax and they melted. Maybe somebody in the den can remember. But that's kind of what happened to these stocks. They flew to the sun, they melted, and they've fallen back to earth. And now these things are trading at 20%, 15% of the highs. And I think that there's a value down here, and not only value, but good technology to go forward and make some money. And I think I'll probably make more money this time than I did on the first time that I played these stocks on the way up. Anyway, the risk reward, and I've said this a few times in the past, and I'm going to qualify this. The risk reward is probably not that good in the indexes, but I think it's incredibly good in the stocks. And the reason why is that a lot of people are going to be trying to push these markets around like they did last night to this morning, and why I did not believe that we fell 160 or 170 points in the Dow, maybe even farther, I don't know. I didn't think it was real. When somebody just sits there and steps on it, doesn't give it a second to come up, to me, they were just running the table, and there probably wasn't a lot of long-term in that. They were very good at running a lot of people out and very weak hands, and scooped them up all the way down, and now they have them on the way up. Icarus, thank you very much. Icarus and Desal, yeah. Isn't it Daedalus? I thought it was Daedalus. Icarus and Daedalus. It's Deadalus. Is that Daedalus? I think that's how it was pronounced. Anyway, enjoyed it. Anyway, we've gone a little too long to get this party started.
And it's all just a little bit of history repeating.
And on this day in 1960, Iran, Iraq, Kuwait, Saudi Arabia, and Venezuela convene in Baghdad to form the Organization of Petroleum Exporting Countries. Oh, happy, happy day. I won't tell you what Andy Heck said when I told him what this day was, which nearly brings the industrial world to its knees in the 1970s by jacking up the price of oil. But of course, as all things do in commodities, when the price gets high enough, people get to looking. And of course, we've seen once more that commodities eventually will find their ways. Most countries do not have a monopoly on one single item. They did for a while. Just because their crude was so cheap, they could move it up. You think about all the world history that was made starting on this day, but I do digress. Got a lot of other things to talk about in this market. Let's go back. I wanted to look at the and give you the come on. Why is that not doing anything? I don't want to get the Steve Rhodes disease of no data. Okay, and I don't. We're up 17 points on the S&P cash, 2.2 billion shares. Anyway, wanted to talk a little bit more about the day after the day after the day after tomorrow. The day after the Apple Dog and Pony show yesterday. Of course, I was on the air for a great deal of that. I had to go back and look at other places. But I wanted to hit the major beats that came out of yesterday in Apple. In fact, Apple is up $2.25 as we speak. Volume's pretty good at 47 million shares. When we come back, we'll hit the major beats. We'll get into charts at the bottom of the hour. A lot of things to talk about.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And of course, I know a lot of people are very, very bearish these days. I told Andy Hecht when I was talking to him earlier before the show that I was half of a mind just to play this the entire show.
It's the end of the world as we know it. It's the end of the world as we know it. It's the end of the world as we know it. And I feel fine.
Yes, it's not the end of the world. And I didn't see anything in the charts. I actually see a huge diversion. And we talked about that earlier, but it is one of these things where when we were up at the highs, all I could do was play this song.
Everything is awesome.
And at the lows, I try to take at least the devil's advocate position on the opposite side. And so I don't drink the Kool-Aid either at the highs or at the lows. But it is interesting. Anyway, in the den, somebody asked me about what I thought. And of course, since we had Monday off, yesterday, late in the day, the sell-off and the options movements, I suspect were nothing more than option market makers putting their heavy hand to get delta neutral into options expiration next week. We will see. I will look at the options tonight, and they have a lot more for you tomorrow on them if I see anything that really gives me anything. But my thoughts are that everybody's probably just way too short going into expiration. And when you look at the VIX at this level, it is very rare that options at these levels ever pay off. In fact, I try to keep my option buying to probably when the VIX is below 15 and the implied volatility on the stock that I'm playing is probably below 30. All of those things, I don't know if I could find a single stock that had implied volatility under 30 now that has ever moved. I can find stocks that have never moved, even over the last 3 weeks, but I think all of them probably are astronomical chances of ever paying off. It is much more likely that we are in some kind of trading range, but that would be it. Anyway, you can give me a call at 877-927-6648. You can email me at path@tfnn.com, and you can also post a message in the den, like John from Philadelphia. Of course, yesterday was Apple's Dog and Pony Show, and this is the day after Apple's Dog and Pony Show. There was a neat quote out today, and that is the marketing of Apple. And, of course, if you read into the marketing books that they push in the MBA schools these days, there's a famous quote, and I don't remember who it's from, but Apple is not of megahertz and not of megapixels. And that's a famous quote from somebody. Sorry, I don't remember who it's from. But this is something that has gone on with Apple forever. In fact, I can remember in the mid-'80s working somewhere, and some guy, there was a company actually called Crazy Dave's, no relation to me, Crazy Dave's Computer Emporium or something like that. Anyway, he was, it lasted all of about 18 months. But he was always promising ridiculous prices on Apple computers and other things. And they really took the Apple PR machine to work, and that is, don't let anybody know how many megs of RAM are in it, how big the hard drive is in it, just to keep them away from that. People get confused and they don't buy things. So what we want is the stupidest of all people just coming in here that just want everything to work, we don't want them educated, because if they do, they won't pay 3 times more for this Macintosh than they will for this PC. So anyway, Crazy Dave, stack them high, let them fly. I had a small ad in my shop that read, across the street, it was a cartoon actually, when people came in and asked me about it. The little cartoon said, across the street, where people make no claims to their mental instability, this item is $10 more. And that kind of summed up Crazy Dave's advertising altogether. But Apple's very big. In fact, it took me more than 30 minutes to find out what processor they had from Intel in their new device, their new iPad Pro. And it took me forever to figure out what the price was. Basically, if you bought it with the stylus and the keyboard, it's about $1,100 to start. Everything was incredibly murky about what they were pushing at here. And, of course, if you've ever loved the little boys from South Park, Colorado, they did an entire episode of Simpsons Did It, because every time they ever did a cartoon, someone would say, Simpsons already did it. Simpsons already did it. You're just ripping them off. Anyway, when I saw it, all I could say is it's the Microsoft Surface. Yeah, it's the Microsoft Surface. Simpsons did it. We'll be back in a minute. A few more thoughts about Apple.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Anyway, going to wrap up a few of my thoughts on Apple. But that's it. The iPad Pro, pretty much already done by Microsoft. I didn't see a lot of difference. They're talking about their stylus by calling it the Pencil. Really looks to me like the Microsoft Surface. So Simpsons did it. And of course, the reaction to the CTIA, which is the convention going on literally yesterday and today and tomorrow in Las Vegas. We need to send our man Andy Heck over there and infiltrate it. Is the convention of the cell phone providers here in the United States. It's not a big convention, of course, not reason to send a ton of people there, but they're all trying to put a pretty brave face on for what is a very competitive program from Apple. In fact, it is probably much better than the ones you're going to get from your cell phone providers, and they're going to sell you an unlocked phone. So Apple is starting to make some shots across the bow of these cell phone providers that are now basically charging separately instead of burying the price of the iPhone inside the contract. But that's kind of interesting. We're going to go to Dave in Panama City. How you doing today, Dave?
Great. How you doing, man?
Are you going to talk about the about a stock that bought me a new car or a house or something?
I wanted to get your opinion on Biogen. Yesterday's high was 317.82, and with the push-up today after hitting a low yesterday, I wanted to see if you think it's going to take that out today or tomorrow.
You mean the highs?
Yeah, 317.82, the high of yesterday.
Yeah. Well, I think it's probably going to 338.51. I mean, that's where, if you were thinking about reshorting this, is that the idea?
No, I actually have the 315 weekly calls that expire tomorrow.
I think you got 338 in this. The energy off the bottom has been fairly decent. And, like I said, I think we're probably going to kind of meander, stumble, fall up to about 2030. And at that point, I'm going to have a decision on whether this market's headed back down lower. Right now, we're stuck in that 1930, 1920 to 1970 range. But I think, the Fed hedges a little next week. I think we could have a lot of short covering into the end of the week. So I think the answer is going to be in the options tonight. And I will be looking at them hard and have more answers for you tomorrow on it. So I don't think it's something you have to make a decision today on. If you're already long on them, I would probably make sure that, if you don't get any movement, you don't want all the premium to evaporate out of them before the weekend. But other than that, I think, if I'm just looking at the chart now, I think you got probably an 80% chance of 338 before you have much lower in this.
All righty. I appreciate it.
You bet. Just one man's humble opinion that we go higher before we go lower. And what else? Oh, wanted to go back to my slide. I had one more thought that I wanted to get to here. And that was Ross Levinson. If you don't remember him, he was the CEO of Yahoo before they brought on the current CEO of Yahoo. I think there's been 5 of them. I think Jerry Yang was the guy that did most everything, including throw some money at Alibaba. And, of course, the drumbeat to get the current CEO out is coming. I didn't think she would last as long as she has. And I think, actually, it may be the curse. I talked about this, I think, in my newsletter a week ago, and that is the curse of Sports Illustrated. They used to put people on there as the next big thing. And no matter whatever happened, horrible things happened to that sports guy. I remember, I think they put Bo Jackson on it in the 80s. I remember that he was, of course, local hero for us and the Royals at the time. And, of course, he ended up having glass bones. Everything broke on him. Literally everything. I mean, all his, well, maybe he used steroids or something, but whatever it was. But anyway, there was been a long line of people. It's may just be apocryphal, may not be real. But I think that all of her, before she did anything, throwing, these people on the front covers of magazines without an achievement is almost cursing them, almost damning them before they ever get started. And I think there was a lot of that. You want to wish that a lady that's pregnant can do all this. And I don't know. If I'm the new skipper of the Titanic after it's hit the iceberg, it's hard for me to figure out a way that the thing ain't going down. I think maybe she could do a better job of getting as many people into the lifeboats as possible. But and maybe she's done that. But I think the ship's going down. Anyway, Ross was out talking today of his previous achievements. He is one of the people heavily named as being the next CEO of Twitter. He was actually pushing another man named Adam Bain. I would suspect after this interview that we're probably very close to seeing somebody named it, and I wouldn't be short Twitter, not because it is going to the moon, but because it probably's got $2 or $3, $4 in it to the upside if they do name the CEO. He was really pushing Adam Bain, who worked for him for some 7 years. But I have to say that why he was the CEO of Yahoo didn't impress me. The interview he had today made me think that this guy has learned 10 times the amount of stuff that he knew before he was the CEO of Yahoo. He's now actively out working and starting his own startup funds. He's got involved in some 7 or 8 different companies as startups, as funding them. Apparently, he had lots of juice. I mean, cash, cabbage, Benjamins, and he's been buying up a lot of these early startup companies. But I think if they talk to him sweetly, he may be the next big CEO of Twitter also, even though he is denying it. But if Adam Bain comes in, I think you got a $3 bounce in Yahoo. If Ross Levinson comes in, I think you got a $5 bounce in Twitter. So just be knowing that I think we're very close to it. I would not be short Twitter, as ugly as it looks. But that's it. Anyway, just some random thoughts out here. And then we're going to go back to some charts and some non-random thoughts, if I have any to give. But we will continue keeping an eye out on this market. And what do we have out here? 1960 and up $18.57 on S&P with a 2.36 billion shares. So volume starting to taper down. Even yesterday, it was kind of interesting to see a lot of after the market volume come in, and quite a deal of it shortly after the market closed. Again, maybe just one of these artifacts of everybody trying to get delta neutral on a short week, since we were off on Monday. Anyway, other stocks of interest I wanted to go take a look at, and movers to the downside is Mobileye, MBLY. This thing was off as much as 7%, maybe, probably still is 7%. Huge volume to the downside. $41.80 is the last major low. You're at $44.31 for the low of today, but you had 12 million shares. You're in this candle at 8 million shares. So for me, you've blown through these 2 gaps that have been out here. You've got one more gap, and this is a rarity. Normally in these 3-gap plays, you come back, and as soon as the 3-gap play, the third gap is in. But we're starting to see a lot of these stocks that had 3-gap plays and kept going higher, literally getting ready to come back and hit and move a lot of these 3 gaps. I think you've got at least a possibility in this one. While I'm bullish on the general market, some stocks like this one look to me like they could go back and fill even the bottom of these gaps. So I think it's going to be a lot more of a stock picker's market than we've had in the past. But somewhere between 35 and 36.50 is the last gap down here, and I don't think you would have a problem filling that particular gap. The news out here today is basically very cautious comments from some of the analysts who set a short-term price of $25 on the name, which probably tells you everything you need to know. $35 does not sound tough when they're calling for 25. And normally analysts only do that for 1 or 2 reasons. They're short, or they want to buy it at a lower price. Don't know the reason on why this particular analyst would do something like that. We were going to talk about a stock that I was long, PBR. We bought this under $5. I think I sold it at $4.93 today. There was always the possibility this thing would come back and test the previous low, which is $4.68 from August 24th. I liked it. We had a nice little run. I was looking for a great deal more out of it. Didn't get it. But one of the reasons this basically had 2 reasons for gapping down today, other than the soft market to begin with. The first was that Brazil is now going to tax the living daylights out of everything, including energy. After the market, it was down about 10% or 10 cents last night. Of course, as soon as they did,
Suspicious item has been detected.
well, thank you. Somebody sent me a nasty email. I'm going to have to figure out how to turn that off on my virus detector. Anyway, that was the first thing. Well, of course, was the taxes. Of course, as soon as the S&P rating agency figured it out, no, that was a vast security. My engineer wants to know where that came from. That was a vast security. You can turn that off. I just haven't figured out where it's at. and the new version of it. Anyway, the Petrobras, of course, had that after the bell. Well, it wasn't an hour later that the S&P decided to go ahead and move all the bonds from Brazil to basically whale poop levels. And of course, everybody knows there's nothing lower than whale poop in the ocean. So that's it. Basically, they moved the bonds all to nothing. And if they're going to borrow any money, it's going to be astronomically expensive to do so. So they're going to have to live with whatever they have out here. But you basically had a 1-2 punch. And why this thing's actually holding okay in these levels and may not break the $4.68, the problem may be that this thing will have a cloud over it for years to come until the government just stops deciding to do stupid things. So, I lost 6 cents on a $5 stock. It's not the end of the world. I've got a lot of other stocks that are doing much better today, so I will move on it. But even the best chart patterns out here and a up market can't take care of stocks in foreign countries where they decide to do stupid things. And I think this thing's probably going to go down to the 468 level and then go sideways for a while. The question is just how bad does it get in the energy sector? I thought we probably were putting in some kind of lows around this $45 level in crude. And I like the fact that Petrobras, of course, was not in the U.S. and therefore would benefit from a stronger U.S. dollar. And what are we looking at the dollar index right now? And, it's down a little bit today. It's down 57 cents, 95.45. It's in the trading range also. But it's very tough to figure out exactly what you're going to get out of this at the moment. So I took my money and ran. But my theory that these companies may be doing better because they're outside the United States on a stronger dollar may not be working out as well as I thought it did. So next, and like I said, I bought some other stocks that are doing much better and put money into the winners and got rid of my losers. Another stock that's down today is Williams WMB in this energy space. The Williams Company. This thing is down, testing its previous low of August 24th, like a lot of these stocks will be. Right now, 14 million shares is being tested with 9.9 million shares. You got to figure that, 248? We're looking at, 12 million shares? 13 million shares, probably? Yeah, I think that's probably a good guess. We have broken that previous low and closed back in that trading range. So as long as volume, comes at 12 million shares, you may get a small bounce out of it. But again, not enough for me to spend my money on. I think there are much better stocks out here testing lows with much lighter volume. Not exactly sure what happened on this one. I'm going to read the news on it. I saw all the earnings, and it didn't really look to me like everything was that horrible, but Lululemon is blowing away its lows today. Its previous low at $55.16 with 3.4 million shares is being obliterated, smacked around, beaten like a redheaded stepchild, hit like a baby seal on an ice floe. 25 million shares. Oh, the horror. We'll be back in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Anyway, Lululemon, we were talking about this massive volume, 3.4 million shares. We've done 25 million shares already today. I don't think that you can say much other than that. The big gap out here at the 46 to 49.50 level, and that volume is 15.9 million shares going back to December 11th of 2014. I suspect you've blown all these away. You're probably going to go back into that. I'm not exactly sure, but boy, there's some brutal. I mean, I think it did okay after earnings. It was down a few bucks, but whatever they had to say, everybody and their dog decided to downgrade them, and most of them went from sell to sell from hold. And I mean, I'd have to dig back farther in it. And of course, nobody likes yoga pants more than me. but I didn't have time to go through that. Other stocks of interest out here also, it's off 4%. AYI, as we take a look at it, and we check back in with markets already in progress over most of the station. We're up, still up 15 points, 2.45 billion shares. Acuity Brands down fairly strongly. Let's see what's the deal on this. Downgraded. A lot of downgrades out here today. And again, maybe a lot of issues out here with options. This thing had a nice bounce off the lows. Maybe they're trying to get it down a little bit. Maybe they're telling the truth, but I doubt it. This should have some extremely decent support, about 183, 182.50. Of course, the last low was 184.92 on August 26th for the ultimate low. But, you basically about the same volume as on that August 26th low as you have today. So the volume has not been all that bad. You really just want less than 880,000 shares from the 24th, which, of course, was the big day. Did go slightly lower on the 26th, but I'm going to use the highest volume, 880,000 shares. And you may even get into that yet today. But at the same time, your support is going to come back in from the candle of, what is it, July 1st of this year, where this thing gapped up. Had some moves. So, you got, what, maybe another $10 down, something like that. Let's see if there's anything else on my list out here that I wanted to look at. SLG. INCY, I think is going to be the last one for today. I got some email here I forgot to get to, too. See if I'll have a chance to get. Insight Corporation. Biotech's outperforming, Stanley Morgan, Bank of America, yada, yada, yada. Speculation, yada, yada, yada. Gilead's $10 bill, yada, yada. So noise. And that noise is propelling INCY above the July 15th high of 121.70. That had 1.8 million shares. You got 1.1 million shares, 1.2 million shares today. So not enough volume to probably break through these highs on this one. And you probably be watching this one for a high if you don't get any volume here in the next couple of days. But again, a lot of these stocks that came down have had pretty strong volume on the way back up. In fact, on the second, this thing had 2.2 million shares as it approached that July 15th high. So it's not as bad as one would think. I'll have to take some more looks at this one. In the meantime, sell when you can, not when you have to. Also cover when you can, not when you have to. We'll see you tomorrow here. Same bat channel, same bat time, 2 o'clock Eastern. See you then. Be there or be square.
The TFNN End of Summer Tiger Dollar Sale is here. We've just announced our best Tiger Dollar Sale is back for 5 days only. This week, you can get up to a 40% bonus on whatever you spend when you purchase Tiger Dollars. Tiger Dollars are the best way to lock in added value and extra savings for any of your TFNN products or services. Normally, we only offer a 10, 15, or 20% bonus, but for this week only, we've doubled all our bonuses and are giving away 20, 30, and even 40% bonuses on all Tiger Dollar purchases. Tiger Dollars can be used for any TFNN product or service and never expire. So whether you're a subscriber already or planning on trying out a product soon, now is a perfect time to get your Tiger Dollars. For more information and to purchase your Tiger Dollars today, visit the front page of TFNN.com for all the details. Remember, this sale ends Sunday, so act now and don't miss out.
You're watching Tiger TV.